I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
Good afternoon, everyone. This is T3 Live Editor-in-Chief John Darcy here to bring you the daily recap. So today we finally got those all-time closing highs in the S&P. Hooray, everyone go crazy. Maybe we'll get some of that exuberance that we've been talking about hasn't been present despite huge moves in the Dow and the S&P. Normally when you get all-time highs and those types of closes, you get a lot of excitement and those type of things, and it can potentially lead to a pullback when everyone gets overly, like I said, exuberant about these new all-time highs. But right now it doesn't feel like that. It's hard to even believe that we're at all-time highs after the depths of the financial crisis and the jitters that still feel like they're present in the market, and some of the volatility that has evolved because of, frankly, some not great market structure. But that's neither here nor there, and the price action continues to remain bullish, and traders that are paying attention to the trend and just following the basic signals that are out there are the ones that are doing well right now, and the ones that are trying to be cute and trying to be contrarian and trying to pick tops. Those are the ones that are being frustrated and left after this amazing first quarter saying, what did I do wrong here? But talking about that first quarter, as today is the last trading day of the quarter, it's a good time to reflect for traders and for us. And with today's small gain to push the S&P to all-time highs, that created a 10% gain for the first quarter, which that's a tremendous move for a market that had a lot of naysayers going into the year. You open the year, you have a lot of columns and articles out there that are naysaying this market, pointing out all the reasons why a big correction is due and all the problems that are out there. But in reality, there was a lot of reasons why and a lot of signals why this rally was definitely possible and imminent. The market was being held down towards the end of the year by the fiscal cliff situation, and once that finally got resolved, there wasn't a lot of headlines in the way, and the market just continued to drift higher for most of the year after that big gap and go to start 2013. But that's just the environment we're in. We're in that slow drift higher. Not a lot of headlines weighing on the market right now, and it'll be interesting to see if that continues through the second quarter. But after a 10% move to start the year, we're going to take a look at the S&P chart. Do you pare down your expectations a little bit and not expect another explosive run into the end of the year? It's hard to say at this point, but we'll be obviously looking for clues and signs about if a potential correction is in the offing. Last year in the first quarter, we had a similar type run. Things weakened in the second quarter, so it'll be interesting to see if that pattern follows. But here you look at the S&P chart, you see the move up here to all-time closing highs. We can zoom out and see those previous levels. Scott has been talking in the media a lot over the last few years about what he thinks is the road to 1,700 for the S&P, and this all-time double top that we have, looking at the S&P monthly chart, this is a huge obstacle for the market, and it'll be interesting to see whether the S&P can accelerate above those all-time highs or whether we get some consolidation, some rest, a pullback at these levels. I think that would be healthy after a monster run to start the first quarter of 2013. But an interesting thing to note, and it's not necessarily a red flag or a huge sign of caution, but you're seeing defensive sectors continue to lead, and that held true today as the S&P pushed to all-time highs. You had the utilities and the healthcare sectors were the strongest sectors in the market today. And if you go to the chart, we'll go back to the daily chart and take a look at the utilities ETF, the XLU. And look at that move it had today. You know, the S&P it did push higher, and it did give us that 10% gain for the first quarter, and it did close at all-time highs, but it was led much more significantly by the utilities. You know, a nice powerful move, and look at the move the utilities have had in 2013. You know, they've been steadily trending higher, and that's where consistent money seems to be flowing. You know, there's some erratic action and some money bouncing around in, you know, the more high beta risky sectors, but you see these safety stocks and these safe sectors having money rotate consistently in, and I think that's a reflection of the fact there are still jitters for investors following the financial crisis, and people want to put their money to work in safer sectors and safer type stocks. And in that type of environment, I think you could potentially look for a weakening in those high beta and especially tech-oriented sectors, even though tech has been lagging the market for this entire year, largely because of Apple. But just something to keep an eye on and something to take note of. And I think we could get some downside probing, or at least don't expect the market just to continue to climb relentlessly from these levels after the S&P closed at new highs. In the healthcare sector, like I mentioned, it also outperformed. You had United Health. I talked about it on Tuesday or Wednesday, the fact that it was breaking out. It's now back above all of its moving averages, its short-term and its long-term. It climbed back above its 21-day. And if you zoom out to the weekly chart, you see a nice upper level base here in UNH. That's something I think definitely to keep an eye on. There was a great blog post on the site today by Rich Annunziata, one of the mentors in the T3 Live active trader mentoring room, where he talked about when you get a choppy market, a market that's choppy from day to day, where you have one green, one red, one green, one red day, you want to do your game planning and your stock picking on a longer term time frame in terms of generating your trade ideas. So he was looking for a lot of stocks recently that had, you know, multi-month upper level bases. And, you know, I'll go over a few of those charts in a second that he's been trading and been watching, but I think UNH is another example of that, is one that's been basing basically since the beginning of 2012. And I think it could definitely break above this upper level wedge and give you some continuation to the upside. Those stocks that he was talking about game planning on a longer time frame, one was Visa. If we go back to the daily chart, you can get a better look at it. A nice upper level consolidation rest in Visa. You know, it looked like it could potentially break pivot lows, or, you know, upper level pivot support back here on, what day is this? This is March 19th, but it quickly erased those gains, climbed back above its moving averages, and then it hasn't looked back from there as news of its potential acquisition of Visa Europe hit the tape a few days ago, and Nomura analysts were very positive on that news, and it looks like Visa can continue higher, but that's one that had a long-term base that broke out, and that's the type of trade that Rich was talking about looking for. Similar type thing, you see MasterCard, same thing in the credit cards. Celgene, CELG, another one that you know, had a nice base here it broke out of. This has been trading really well technically. You know, if you're looking basically just for upper level bases to trade off of, Celgene has provided some great opportunities recently. But here more recently, all of March, there's been, you know, multi-week consolidation in Celgene, and the last 2 days we've seen some nice price action. This was one that he focused on today in the active room, and then I think some guys had some success with. The other one is Monsanto, which I talked about as a quick hit in today's morning call. Monsanto is one that, you know, since 2013 basically been stuck in an upper level base, and over the last few days, after some news hit the wire about a patent licensing deal with DuPont, that was able to spark Monsanto, and you're seeing a breakout. And I think after some rest at these new highs, I think you could get more upside continuation in Monsanto. One thing that I talked about in today's morning call as well was the financials is a sector to really keep an eye on and be wary of as European headlines start to come back more into focus, especially the financial stocks that have the most exposure and most sensitivity to Europe and the European banking system. You see Goldman Sachs today. Yesterday it woke up on that Warren Buffett news, the fact that he was buying warrants, but there was no follow through today. The stock was weak in an up tape. It basically got rejected at its 8-day moving average, and that'll be an interesting level to watch going forward. But I think, in my opinion, the banks, especially Goldman Sachs, is going to test deeper support levels and is not one that I'd be looking to buy the dip yet on, as I think the European debt crisis, it's still there. We're kicking the can down the road, but I think it's something that's going to continue to rear its ugly head at various points over the next few years. And I think the financials will probably be choppy during that time. But right now, I think some of the financials are due for a pullback. And we'll also take a look at the chart of Morgan Stanley, which I think this one might be even a more compelling short with a really obvious gap in Morgan Stanley down here at the 2075 level. I think that's a gap that looks like it definitely wants to be filled. And from a bank perspective, this is my favorite short setup among the banks. Two stocks that I've highlighted the last few days that have actionable upper level setups are OpenTable. It looked like it wanted to go a couple days ago but failed and low volume tape, but today it pushed back towards the upper end of that range. It's one that I would definitely keep an eye on as a breakout candidate next week. And Mercado Libre, another great day of price action. The last 3 days it's just sort of been pushing higher, and now it's back above that upper level base, and I think it looks right for continuation also. One that I would definitely keep an eye on that we've been talking about. On the negative side, excuse me, we have old Apple, where Apple is back to its old self. And when I say its old self, I mean its self of the last 6 months, the one that we've gotten used to more recently, where it struggles to have continuation of the upside after bounces. We had a breakout of this downtrend, but there was no real acceleration above it. And then over the last 3 days, we've had Apple drastically underperform, and it's back below its 8 and 21-day moving averages. And this price action in the last few days negates a lot of the excitement about the break of that downtrend. And it'll be interesting to see what happens with Apple next week. It's one that I would not focus on if I was a trader. I would push it off to the side and focus on things that are more in play. But everybody's always going to watch Apple, so keep an eye on what type of price action we get next week over the next few weeks in Apple. Another one that I highlighted earlier in the week as a short setup was Expedia, which, when a market is choppy, when it's 1 day green, 1 day red, and you're back and forth between a range, you want to look for stocks also that are showing relative weakness and have some short setups in your back pocket. You don't want to always only focus on long setups, despite the fact that the trend in the market is higher. You want to have a few of those, like I said, in your back pocket, that if the market does get a little weakness, and even the market hasn't even been weak and Expedia has been breaking down, but ones that you can turn to if you're looking for short setups. You look at Expedia, we talked about this little mini ascending channel and this little range in that stock, and it broke below it and has continued to accelerate below it, and it looks like the 200-day moving average is in Expedia's future, in my opinion. But that'll about do it. Today another quiet day in the market as we have Good Friday. The markets are closed tomorrow. Today was the last trading day of the first quarter, as I've talked about, and as you probably know, 10% gain for the quarter. S&P and Dow at all-time closing highs. It all sounds great, but there's still a lot of issues for the world economy to sort through. You say what you want about central bank easing and central planning and all that type of stuff, but right now we're in an inflationary environment because of what the Fed is doing, and that means that equities are the place to be. And it'll be interesting to see if we do continue to get a great rotation into equities and money starts to flow out of bonds. That's something people talk about a lot. It hasn't come to fruition really yet, but maybe 10% is just the start of a bigger move. But we're technical traders here at T3. We look for signals and we manage risk based on patterns and candlestick analysis and things like that. So we're not going to make blind predictions. We'll just trade the price action and make sure to come back on Monday and we'll tackle the action together. Have a good weekend.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.